this video, I'm going to explain to you how you can acquire a property, renovate a property with no money down, no cash investment on your part, all by using a hard money loan. One of the great things about going to a hard money lender like myself for a loan is we're flexible. We're entrepreneurial. We see what you see in a transaction, and we really take a common sense approach to underwriting. We're not bound by regulatory guidelines that the banks are or the traditional sources are. We're simply not going to fit you into a box. Because we're so flexible, I see a lot of loan requests in a week. I see all different types of properties. I see new construction, I see renovation, fix and flip, you name it. So from time to time, I'm going to talk about different loan structures that I think are worth noting. In the last week or two, I've had borrowers come to me with two different property types, let's call it. One was a single family new build, one was a single family fix and flip. They both had the same exact problem. They had liquidity, they had working capital, they could certainly get out ahead of construction as I require, and they could make loan payments, but they didn't have enough to meet traditional down payment metrics. So what these borrowers were really looking for was 100% financing on their new project. 9 out of 10 lenders would have declined their loan request and sent them immediately on their way. I dug a little bit deeper, had a conversation with the borrower, asked them to provide me with an REO schedule, and come to find out they both owned property with a lot of equity in it. So what I was able to do was to structure a loan cross-collateralized by two properties. I look at the value of their existing property, I combine it with the value of their new project on an as-complete basis, and between the two properties, their value was high enough where I could justify making my loan 100% on the new project, but staying underneath my LTV metrics. So I typically try to size loan requests at a maximum of, say, 70% loan to value. The combined value of both justified a loan amount that was enough for me to fund 100% of acquisition costs, 100% of closing costs, and 100% of construction costs. Now that's why you go to a hard money lender like me.